What I'd like to do is I'd like to talk with you about growth at 3 different levels. First, let's talk about growth as a strategy problem. What have we learned there? What do we need to know about how you grow from a strategy point of view? Second, I'd like to talk with you about growth as an innovation problem. How does one build up your capacity to innovate in the right ways that will drive growth for your organization? Third, let's talk about growth as a discipline problem. What does it take to tune the management system to be supportive of and enabling your ambitions for organic growth? Now, what every company needs to do is build a growth portfolio. And what I mean by that is a series of growth initiatives that are going to drive improvements in performance across each of those 5 or some subset of those 5 sources of new revenue. So perhaps we have a series of initiatives that are aimed in the coming year toward improving our ability to retain our base of clients. We're going to find ways to attack churn where churn is controllable, because perhaps clients are churning from us because we've let our value proposition slip a little bit and there's better value over there and they're going to leave for that value. Or perhaps it's not that if we just knew that they were unhappy, we could remediate that situation, but we're frankly unaware because we're not attending to our core clients. We're off trying to get new clients. So how does one build initiatives that allow you to become better at base retention? Similarly, how do I build a set of initiatives that help me to be better at increasing my share of wallet within existing accounts? What new kind of value do I have to deliver to my client, convince them to not just buy these core products, but to buy additional product and service from me as well? What do I need to offer them to get them to buy more deeply from me and displace my competitor within a category of product? Or how do I even think about those clients as to what is their full potential? Because I may be sitting there selling them $500,000 a year and be fully unaware of what all the other opportunities are within that client that I can be digging out, because we've just not done the research to understand our clients. Those innovations in how we grow share of wallet would be a second set of initiatives within a growth portfolio. And it goes all the way through until you construct a portfolio that is balanced for the nature of opportunity that your business is facing. But think about building a portfolio in any one business that's perhaps from 5 to 50 different initiatives, depending on the scale of the business that you're operating. What our work has shown is that there really are 2 and only 2 categories of innovation that really impact these 5 sources of revenue. One is innovation in what we offer to our clients, the value proposition we deliver to our client, which is broader than just the product, broader than the price, but includes both product and price. Interestingly, though, the way you innovate in your offer to retain existing clients is quite different than how you innovate in your offer to attract new ones, is quite different than how you innovate in your offer to move into an adjacent market space. So while innovation in the offer underlies our ability to grow, you approach it differently depending on which particular source of revenue we're really trying to drive. And therefore, you should expect to see that there's going to be a number of different innovations in our offering if we're trying to, in fact, drive growth across a number of different sources of revenue. The other significant innovation type is innovation in how we go to market. How do we improve our ability to market, sell, and service our clients? How do we increase the ability to win and retain clients for our business? This has to do with our ability to understand those clients, our ability to target the ones that are going to be the best opportunity for us, our ability to build programs to get clients to be aware of what we're doing, to become interested, to in fact have a real desire to buy from us and want to stay with us. How do we build those programs? How do we then build the capabilities of our people, our channel partners, and others to execute on those programs and really achieve a result that we want? All of that we'll call go-to-market. And as with the offer, what you do in go-to-market to improve your chances of retaining your basic clients is in fact quite different than what you do in go-to-market if what you're trying to do is attract new clients. And so again, it's variegated that there are different ways that you approach the marketplace with innovation depending on what the particular source of revenue is that you're trying to optimize. Now, the other significant innovation that can drive improvement performance within a growth portfolio is innovation in how we go to market. Most companies, when they think about how to improve their ability to win and retain clients, They think structurally in terms of what's marketing doing to solve that problem, and how do I improve field sales, and how do I improve channel management, and what could our customer service people be doing better. And while that's an organizational lens through which to look at the problem, it might make sense instead to think about what is your go-to-market model, irrespective of function and structure. What's my go-to-market capability, and then what role should marketing, field sales, channel management, and service play in that model? From our perspective, there are 5 components to a go-to-market model. Component number 1 is really understanding your customer potential. Do I understand the range of clients that are out there and what potential they have for us to do business with them across a broad array of product and service? Do I understand their value sensitivities? Do I understand what it takes to win and keep their business? That's just market understanding. And in every market, there are different levels at which that market's understood. There's some markets where getting that data is easy and you can make it a science, and there are other markets where getting that data is really difficult, and we have a little bit of insight from our field selling organization, but it's tacit and it's not organized and it's not analyzable. Markets are in different places. The second thing you want to do in your go-to-market model then is, once I have some level of understanding of what the customer potential is, now I need to segment those customers, put them into categories, look at where my priorities lie as to which category of client represent best impact, easiest to reach, and then really start deploying resources against those targeted opportunities. That's the whole area of segmentation, market coverage, deployment, and it's not just field sales resources. How do I assign clients to an indirect channel of distribution versus my direct selling capability? How do I assign market communication resources so that I'm telling the message to the right people within the market space? All of that has to do with segmentation, targeting, prioritization, and deployment of my resources as an organization. The third component of go-to-market is, how do I build effective programs, effective interventions to try to move people toward awareness, client potential toward awareness, from awareness to a real interest, from interest to intent, and from intent to purchase. And once they purchase, how do I keep them as my clients? For large-scale organizations, those activities have to be programmatic. It may be that its implementation in 3 different accounts varies, because the accounts have slightly different needs. The 3 salespeople delivering it are slightly different people. But they need to be operating off of a common playbook about, this is how we as a firm move potential clients into our orbit, make them our clients, and then retain them over time. Let's call those things marketing programs. The fourth thing you need to do now is you need to build your capacity to actually deliver on those programs. How effective are my field salespeople? How good are they as salespeople? How strong and aligned with our needs are my distributors? How capable are my service people of dealing with an irate client that calls in and needs to be calmed down and the issue resolved? That's a capability issue that we're constantly attending to across all those functions to say, do we really have best capabilities across the entire apparatus of go-to-market? And then finally, how do I execute to win? How do I put this into a control structure with incentives, with feedback, with results, with corrective action, so that I'm really executing to win? These 5 components are what comprise a go-to-market capability. And yes, they can be looked at through the organization lens of marketing, field sales, channel management, and service. But recognize that each of those functions doesn't own one of those blocks. That in fact they need to collaborate on each and every one of those blocks. And too often in organizations, I see these go-to-market resources working in splendid isolation from each other. I see a marketing organization, for example, using all sorts of sophisticated analytical tools to try to understand the customer and the marketplace and what the potential is of that market. But they're not tapping the enormous depth of insight that the field sales organization has, because their information is messy, it's not quantitative, and I don't know how to connect it to the data I have in this database. Shameful. What a sub-optimization of opportunity by not getting these groups to work in collaboration. First of all, innovation is one of those words, a little bit like strategy, that's thrown around loosely and means a lot of different things to a lot of different people. I hear people talk about innovation, then what they mean is creativity. And I think creativity and innovation, while related, are in fact quite different things. But people think about innovation somehow being creative. I have a much narrower definition of innovation because to me, a creative act, a creative initiative that does not have impact isn't of much interest. So I'm interested in those forms of creativity that really have impact. And there are only two forms of impact that matter to me. One is things that impact the value customers get, and the other is things that impact the value that my shareholders get, profits. Therefore, my definition of innovation is it's a significant improvement along a main parameter of performance that improves customer value and/or shareholder value. So if we're trying to innovate in customer value, then I'll call those parameters of performance main parameters of customer value. I need to move the needle on those to make a big difference. If we're talking shareholder value, then we have main parameters of shareholder value. What are the things we've really got to drive that really drive our financial model?